Hi, Justin.
Morning.
Very nice picture, by the way, Rebecca.
Thank you.
Yeah, a couple of those would be bad.
Okay, we are live.
Thank you, Kelly. I have 11:30. I'd like to wait just a second to see if Virginia can get connected on audio, and we're still missing Dave and Jack. So if we give them just a second here, then we'll get started with roll call. Jeff, are you able to hear us okay? As I always say, Zoom and the like have been a blessing with everything going on, but when you're in a room together, you can actually tell who's there, at least physically, most of the time.
But not mentally.
That's why I preface that. With the days everybody has, I can understand that sometimes. Well, Rebecca, I'm ready when you're ready. If you'd like to start, since it is 11:30, we can do that if we have enough for voting purposes, and that's the only thing I'm concerned about. And I think in the past, we've talked with Justin about being able to assign people as voters if we need to.
Yeah.
And we may have to do that in this situation, depending on who can and cannot be heard.
I can be heard.
Karen, I got you. And I got
Okay.
Marvin.
Yeah.
I think Jeff just may have tried a different way to get in, and I saw a mic go on and off, so maybe Jeff's able to be heard now too.
I hope that's the case.
That is the case. We can hear you. Welcome, Jeff.
Yes.
Thank you.
And then Virginia, have you been able to get connected? So Justin, what do we need to do officially to have Marvin and Karen and
Virginia is calling in right now. So.
Virginia's calling in?
Okay. I need to open the bylaws.
Virginia, can you?
Who do we need? I'm sorry. Can we start there? Officially, we've got Virginia, if she can be on,
Virginia's on and Jeff. So you
and
have,
Jeff. So Virginia, if we can get Virginia, we're good, because Jeff is good. If not, we need to have Karen or Marvin, or both.
Well, Mike too would represent a quorum here. So
Oh,
regardless of.
very true.
so we
Virginia's
could-
on. We can hear
Virginia's
you.
on. All right, let's get started then. Kelly, if you'll, I know we've gone through this, but if you'll do the official roll call.
Sure. Mike Lewis,
Ravenna Township present.
Marvin Woods,
Streetsboro, present.
Karen Beck,
Present.
Jess Childers,
Southern Portage County present.
Virginia Harris,
Streetsboro,
Justin Markey,
Justin Markey, Redstone Andrews.
Parta, Rebecca Schrader, Parta,
Claudia Amrine, Parta. Denise Babel, Parta.
Layton Hoppick, Parta. Ryan Troutman, Parta.
Kelly Jurish, Parta.
Thank you very much, Kelly. Second item on the agenda is guest communications. I don't believe we are required at this point with COVID-19, so we do have old business. And Rebecca, if you'd like to cover that, please.
Yep. I'm going to share my screen. I sent you guys out. A couple other spreadsheets just so you have as a reference, but I will pull them up here as well. So at the board meeting, I realized that if you see my screen, the budget numbers for capitalized maintenance at 164,000 and the other materials and supplies budget for 582,000 didn't make any sense. And I wanted, they are correct. The expenses are correct. The expenses have been moved into from capitalized maintenance services to other materials and supplies. And I wanted just to explain quickly why. And this goes back for many, many years. And these accounts, you can see all the different account numbers that we have. I don't think you guys have ever seen our trial balance, but these are all the 400 digits are revenue accounts, and the 500 digits are expense accounts. So we have many of them, and when we book invoices, we book each invoice to one of these accounts. And so there's a confusing thing when we talk about preventative maintenance. Really, it has a couple different aspects to it. Back in the day, we did not have our own maintenance department. And so everything we did, we contracted out. In fact, it was to Rivers. And so that is true contract maintenance. We drew all those funds down federally under preventative or capitalized maintenance. And so those words kind of got mushed together. And when we brought on our own maintenance, we don't really have contract maintenance anymore, but we literally buy parts to do our own maintenance. So you can see, well, let me show you first. You can see that this number here is contract in services. It actually is 0. And this number down here, materials and supplies preventative maintenance, is our draw money. So for the last 15 years or however long we've had maintenance, when I go to do the NTD report, I literally have to take those funds and move them from contract maintenance down to materials and supplies. It's just been a legacy thing, and we've just kind of worked around it. And when I did the budget this year in November, because if you go back and look at the expense reports back, like let's say in July, capital maintenance was budgeted for 614,000, and then when we get to November, it was 164,000. So somehow, I don't honestly recall doing this, but apparently I have now corrected the issue going forward to have the expenses be in the right category. So the expenses haven't changed, the category just kind of changed. So I hope that makes sense.
So the net number's the same as what you're saying?
Yes.
And if you give me 1 second.
The budget actually changed 500, I think it was 540,000. Essentially, it was moved from capital maintenance services to materials and supplies.
Okay. Well, okay.
The budget number as well as the expense numbers too.
Okay, do we have any questions for Rebecca on the old business? I'll have to look at that a little further. I might have a question, but I'll give you a call, Rebecca, if I do.
Okay.
All right, hearing none, if you will move into the new business reports, please.
Okay, so today we are looking at both January and February. There's not usually a lot of items that happen at the first of the year. So here's our January expenses, $1 million in, I'm sorry, revenues, $1 million in revenues. We had $781,000 in expenses. So we had a profit or a surplus of $262,560. Our sales tax is again looking good, and we received our annual elderly and disabled fare assistance, which normally comes in January, so that is 100% received. Looking at the numbers for February, and then I'll look at the summary so you can see both January and February together. I just wanted to show you this so you see it compared to the budget. For the month of February, we should be at 16% of the budget. We are doing a little bit better this year, or this month, compared to the last several months in fare boxes and agency cash grants. Our KSU revenue has picked up. However, they will be closing as of April, the second week in April. They go on spring break and then go to virtual after that. So for the last 3 weeks of the semester, we will be going back to the limited service for Kent State. So that revenue will go down. We haven't started to draw down any of our state and federal capitalized maintenance. It does show in the monthly budget that we should have gotten or should have received capital maintenance money from the state. That's just a timing thing. We actually haven't requested it yet. So it'll be showing up in the next few months. So for the month of February, we had $740,000 in revenues. For expenses, all of the wages and benefits are looking good. For others,
I am, thanks.
hi, Dave.
Hello. I'm in, thanks.
Okay. So a couple other items let me go back to January. We did pay our quarterly software maintenance for Trapeze, which is in this capitalized maintenance services. It's a quarterly payment, so that was booked in January. In other services, we had a couple different things. We had the maintenance software equipment maintenance was renewed, and also the PIDS, which is our passenger information display system. We had an annual renewal for that software as well. So we had $616,000 in expenses and a surplus of $123,000 for the month. So looking at the 2 months together, you can see January and February, everything is looking pretty normal. For other revenues in January, we received $200,000 as a refund from the Bureau of Workers' Compensation. We've also sold, in January and February, we sold 3 buses. Well, we sold 2 buses. We took one to the scrapyard and a old snowplow. So we have some other revenue, as well as advertising revenue that we started. If you recall, we have brought the bus advertising in-house, and we have been working with Mona Frakenwitz to do that advertising. Again, so here's the expenses side by side. You can see the increase in February for the students. That reflects the beginning of the semester. We have had some overtime, quite a bit of overtime, especially end of February and in March. We are short on drivers, so there is quite a bit of overtime. And so cumulative, we have a surplus of $386,000. Any questions on expenses and revenues for January or February? Okay, moving on to the next report, which is the capital report. In column B here, I have a prior year column. Some of our projects have kind of lasted. They started last year and they're continuing on. So I took all of the information and combined it together for previous years and put it in column B, so we can kind of start from scratch. Here at the top row shows our operating surpluses that came over from the last report. Previously, we've drawn down $150,000 for the added cost from diesel buses to CNG buses. We currently have $25,000, or well, this says $50,000. I thought it was 25, but it might be 50,000 that we have left over. Oh, it's 25,000 per bus. We have 2 more buses to draw that money down. So hopefully we'll be doing that shortly. Previously, we had drawn down for LTV buses and we had $14,000 left over. So you can see in February, we drew that down on top of the new money for the LTVs. Those are the 5 turtle tops that we received towards the end of the year and 1st of January. These are drawdowns here at the top. So you can see the bus storage facility, as I had mentioned, that project started last year. We drew down $400,000. The storage facility main project, phase 1, is complete, and we should be going out to bid here shortly for the renovation, or the, not the renovation, but for the build out for the mezzanine, the workout room, and the storage area that's inside the storage facility. You can see in February, I drew down the money for our bus camera, our building cameras, and the networking. So you can see the associated expenses that we had previously gotten in January. I think told you before that I hadn't done a draw at the end of December or in January. The first draw I did was in February for those expenses that we had already paid. It was basically just reimbursing ourselves. So we currently have $2.9 million sitting in restricted. We have the local match that we will need for all of our projects for 2021. And then in addition, we have money set aside for additional future capital projects. So that's really the nuts and bolts of the capital report. Any questions? Okay, moving on to the statement of net position. So here you can see the variance from December of 2020 to January. Our cash increased $55,000. Our receivables increased $68,000. That's primarily going to be Kent State. We had another payroll deferred accrual. This is the money that, if you recall, starting in October, the Gateway did not have cash flow to be able to pay PARTA for their payroll expenses, so we hadn't done those transfers. So there was another $14,000 in January. And then just as a precursor, we started making those transfers in February. So we'll be paying back $74,000, or the Gateway will be paying back $74,000 to PARTA for those payroll transfers. The part of the prepaid expenses that you're seeing in December was the elderly and handicapped grant that you saw on the operating, the finance report revenues, which was accounted for in January. It was put in prepaid. I'm sorry, that's not right. Prepaid expenses are expenses that we would have paid, January invoices that we paid in December, like health insurance is the big one. What I was referring to would have been called unearned revenue, which is here on row 43, 139,400. That's that E&D state grant that we received in December, and then the revenue is actually realized in January. So in January, as we saw in the capital report, the last 2 buses that were delivered, we showed that expense for 100. These are the LTV turtle top buses, $185,000. So for year end, these numbers may look different from what you saw in December. The deferred outflow, deferred for OPEB and pension, as well as the deferred inflow. These are the Gatsby 6875 required disclosures that we have to report for pension liability. Those are computed for us by an actuarial company called Lennon and Associates. We do those once a year at year end. Those numbers are in there. Actually, as an aside, I am working on finalizing our audit report because the state auditors will be arriving here on April 5th. So I'm consolidating our financial reports to put into our audit report. So these are actually good numbers or accurate numbers pre-audit, and will stay the same then going forward for the year. Here's the net pension liability that I mentioned. Our payables increased $123,000 at the end of January. This would have been the buses that we just talked about, the LTV buses. So then moving on to February, you can see the variance from January to February. Our cash decreased $280,000. Essentially, we paid for the bills. Receivables increased another $65,000, again, primarily due to Kent State. No fixed assets purchased. And so accounts payable, we had the $400,000 of Campbell invoices for the final payouts of the construction, the storage facility construction, as well as the buses. So we have paid all of the bills that were outstanding at the end of January. All right, any questions about PARTA? Okay, then I'm going to move on to the Kent Central Gateway. All right, looking at our blue report for January, we had a total of 4,534 cars. This was an 18% increase from December. And then in February, we had 4,982 cars, which was a 10% increase from January. Still obviously below 2020, but we are currently trending in the right direction. You can see down here, the yellow line represents the number of cars per month for 2021. Interesting to me is that the trend line is increasing the same, even though it's at a lower level. So I would expect, probably because of spring break is later this year, I'm expecting then in April, we'll see a little bit of a dip, and then hopefully we'll start to increase for the summer as things start to open. So the annual comparison, comparing January and February of 20 to January and February of 21, it has decreased 46.1%. No surprise there. Our graphs here at the bottom have not changed very much. The colors all are pretty much at the same levels. Any questions about the number of cars? Okay. Caught me before I could open any more reports. All right, so the income and revenue finance report. So for the month of January, you can see things are still picking up, but below the monthly budget. We have, let's see, what would I like to tell you? There's not really very much to talk about other than the fact that we are showing a $3,000 surplus to be a little bit excited about. However, we have an $8,000 quarterly revenue for the retail space, the Burbick retail space here on, can't make my mouse work, on row 9, which kind of makes that surplus look more exciting than it may be. But we'll just move right on to February. And we again are showing a surplus of $1,039. So that I think is pretty exciting. Still under budget for the hotel overnight parking, but right on track with monthly parking revenue. Our daily is still tracking a little bit behind. We're receiving our second floor revenue just like we should. Our salaries are under budget. In fact, all of our expenses except for materials and supplies. And I'm not sure. I know we've done some beginning of the year maintenance on our oil separators and on the elevator. So those were big expenses. We did some electrical work, had to buy some supplies for the electric. We made some changes to the old Cutler space to make available possibly for the Kent Health Department. Those expenses are being reimbursed. So I've actually booked a credit because we've been paid by the Kent Health Department for those expenses, but we hadn't booked those expenses yet. So there is in other services, there is a $2,400 credit in there without the correlating expense. That's why other services is showing so low for February. Everything else is really tracking nicely. So for January and February combined, we are recording a $4,300 surplus. Looking at the summary page or the A+ report, again, things are staying pretty consistent. We had in January 506 validations and 428 validations in February. We are billing them using the new overnight software at $13.50 a night, but I'm still keeping track of the old way with the validations. So that information is there if we need it. Again, things are just staying pretty consistent. And so our cost per, let's just look at February, because the $8,000 makes revenue, the $8,000 revenue makes things just look kind of strange. There was another expense. This was the contract maintenance that I talked about with the elevators and cleaning out the oil separators. So January, we did have a little bit more expenses than we did in February. So the cost for February to operate the deck would have been $5.36 per car. And the revenue that we're receiving is $5.28 per car. So the numbers are starting to meet, and hopefully we'll turn and go the other way. Any questions on expenses and revenues?
Rebecca, probably with spring break, we're probably gonna have a couple lean months with the parking deck, and then we're hoping that activities in downtown with everything going on will start to increase. And if you look back to last year, that's when the bottom dropped out. So hopefully the summer activity will stabilize and allow the Kent Gateway to stabilize moving forward throughout 2021.
Agreed. The last thing that we heard is that the downtown festivals were canceled, but planning to open up in July. Heard if that had changed. Still July as of right now. So.
That's the last I heard also. All right, any questions on the Kent Gateway?
I have one more report, the statement of net
Okay.
position. I don't know that there's really too much to talk about with that. Okay, so we have going from December to January. At the year end, I have to pull out all of our prepaids. As you know, we have a bunch of people that pay because the parking the parking fees are due on the 1st. So they would have paid in December, but those prepaids are taken out. And so the actual receivables would have been $26,000. And then in January, they would be put back in just to show with the negatives. So no capital changes. The advanced payroll we talked about. And we did, I don't remember if I mentioned this when we talked about December, we did have a meeting with the city of Kent. We will be splitting the deficit between PARTA and the city of Kent. PARTA's already contributed $75,000 towards that. I think the total of it was 100, I think it was 138,000 is what PARTA would overall owe to the deficit waterfall account. And since we've already paid 75, we owe about $40,000 more, which will help offset the payroll transfers that we didn't make. So I'll be making those changes probably in April. You'll see that get all tied together in those reports. So from January to February, cash decreased $27,000. Our receivables, again, because of the quarterly payments, some of that revenue was recognized, no capital, and a decrease in accounts payable. So I'm going to stop sharing my screen, and I am available if anybody has any questions.
Okay, hearing none. Thank you, Rebecca. That's a lot of information. It's a couple months in a row we've had a lot of information, so good job. Next thing I have on the agenda is a resolution 2021-0301, resolution by the Portage Area Regional Transportation Authority Board of Trustees authorizing the general manager or her designee to purchase up to 6 light transit vehicles of wide body construction, optional equipment, and spare parts from Transportation Equipment Sales Corporation, TESCO. Claudia, or were you going to say something on this then?
Yeah.
Or Rebecca? Thank you.
So we did a procurement last year. We awarded a 5-year contract to TESCO. We ordered our first order last year. This is just following our normal procedure for our replacement schedule, and we would be replacing 6 LTV vehicles under that same contract.
Pretty straightforward. Thank you. Any questions? Okay, so at this point, we would need a motion to or not approve, but to forward to the board for approval.
Mike, I'll send that to the board.
Thank you, Jeff. Can I have a second?
I'll second.
Thank you,
Virginia.
Virginia. All in favor, signify by aye.
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 Any opposed? Hearing none, it'll pass to be forwarded on to the board for approval. Thank you very much. I was given no advance notice for a need for an executive session. Do I hear any at this point? I'm seeing head shake. No. So I'll ask for a motion for adjournment.
I'd motion we adjourn.
Thank you, Jeff. Virginia, can I assume a second?
Second.
Okay, then we stand adjourned. Thank you, everybody. Remember Thursday's meeting. And do we have an administration? I didn't see anything on that. Just the board?
Board.
Just the board. So we'll see you at 7 o'clock on Thursday. Everybody stay safe. Try to enjoy the sun before the rain that we're going to have the next couple of days, and we'll see you Thursday night.
Thank you.
Take care, everybody.
Thank you.